Well, in today's business news, there are two interesting developments in the tech space this week. One in microfinancing and the other in smartphone shipments. Well, joining us now from New York with the details is Africa 54 business correspondent Jill Malandrino. Jill.
Hi there. So Bitbond, a German firm facilitating PTP loans via the Bitcoin blockchain, is teaming up with payment services provider BPesa to improve access to financing for small businesses in Africa. The integration is now live in Kenya, Nigeria, Uganda, and Tanzania. There's a huge unmet demand for microfinancing in sub-Saharan Africa, and this could potentially help a lot of small business owners who struggle to get traditional financing.
Well, now speaking of banking sector, Barclays is looking again to sell more of its African assets, right?
Yeah, that's right. Barclays is in exclusive talks to sell its stake in its Zimbabwe unit to Malawi-based First Merchant Bank. The lenders had mentioned this just yesterday. As the British bank continues its exit from Africa, Barclays previously said it was looking to sell the stake as part of its broader exit from Africa announced a year ago, when CEO Jess Staley said the lender would instead focus on transatlantic strategy in the U.S. and Britain.
And what's happening with the smartphone sales?
This is interesting to follow because in the U.S., we are obsessed with smartphone cycles and oversaturation of the market as an indicator for economic growth. Now, according to a new release by International Data Corp, smartphone shipments to Africa grew by only 3.4% year over year. That's a sharp slump compared to double-digit growth rates recorded in recent years. The slowdown in smartphone shipments was down to economic headwinds in some of the continent's leading markets. Nigeria, Africa's largest market, had a particularly tough year to hold on to its top spot. Now, Samsung has reworked its product portfolio, now offers mobile phone models at competitive prices. That tweak will prove crucial in coming years as lower-priced Chinese brands look to grow market share, which is why I think a company like Apple has stayed away from the African market, because they simply can't compete with lower pricing.
As always, thank you very much, Jill.
Thank you.
That's Africa 54 business correspondent Jill Malandrino reporting from New York.